We mentioned Citigroup kicked off earnings season for the financials on a high note, kind of decent results, but the chart action wasn't that great. Chartmaster says if you're looking for bang for your buck, better beware of the big banks. So, Carter, why don't you head over to the plasma? Tell us why.
I mean, that's just it. This is sort of a dormant area of the market. It's an important area of the market. It's lifeblood of the system in a way, but it's just not. It's not working. So let's look at a couple charts to first put this in perspective. I started this chart, a comparative chart, S&P versus the bank index, from the absolute peak of the 2007 market top, October 11th, 2007. We have a financial crisis plunge and then the entire decade of recovery. And what we know, and there's no way around this, yes, that you're still down if you own banks in aggregate, negative, versus, of course, the return for the S&P. Let's do this a different way. Let's put the BKX on top and now look at its relative performance. So here we have our plunge. Here we have this recovery, again, basically a little bit down. But what's so important is it's just been, here's your wipeout, and you've never really gotten any better. And that's, to some extent, dilution and share issuance. But the truth is, now what? Does it work? Is it working? Let's go a little tighter. Now, this is the more important thing, the here and now. This is the presidential election. This is the Trump bump. And this is the big move, which you see on an absolute basis and relative. But what we know after that, of course, is we've undone the entire election. So all of the tax cuts and all of the regulatory relief and all of this, and yet we're below where we were after those very sort of good developments for this area. So now what? Because you don't have those tailwinds anymore. Let's draw some lines on this same chart a couple different ways. Two things I would note is after the Trump bump, you make this high, but you don't make a relative high, right? So you get the big move and the big move absolute relative, but even as it followed through, the relative started to stall. Let's move on and do it another way. Same thing, and here's really the problem. When banks go down, they go down more than the market. When banks go up, unfortunately, they go down more than the market. There's just nothing here, and I don't know what fixes that. So let's look at the chart of the BKX itself. It's a failed, there's no way around this, head and shoulders bottom. That failed. Was that some sort of double shoulder, something out of a strange museum? No, something's wrong with it. Yes, and here are the lines. So working into an apex, you can see them. They're very clear, I mean, deadly clear. And what we know, which is likely, is that when you get into the apex, you get a big move. Bulls believe, of course, it's this. I think it's exactly the opposite. I think the interest rate environment is not going to help them. I think the operating environment, equities, trading, investment banking, and I'd rather be underweight or short banks.
So I have a question, Carter. When you get to that wedge point, you seem to bring in fundamental factors. Is that the only way to then determine which direction that wedge will break out into?
Well, you can. Meaning what's so interesting is we're getting into earnings, and that's what we're resolving. And what was so telling about the action today, I mean, Citigroup's, some people thought the number was good, some people didn't. It was up initially, then it faded, then it recovered. It just shows what a debate there is. And that's the nature when you work into a period of equilibrium. So this will be resolved. It will likely be dynamic. But I think at an operating level, just of course, and an interest rate regime, this is not a place to be. And the chart, the relative performance, says it all.
Carter's going to walk over.
All right.
But you can ask a question.
Well, I can ask him as he's walking. You can do two things.
He's very talented. Very talented chartist.
Of his career.
Look, sitting too.
So, Carter, what I'm curious about is I was looking at the regional banks today versus kind of the bigger cap. Let's call it BKX, right? Regionals have not done well. I've done even worse.
Even worse.
So can you get any kind of technical signal out of looking at the regionals for the larger caps?
I think you can. Remember, so there's a case to be made, and that was the case being made for the last 2 years, that the regionals didn't care about currency, right? And they didn't care about slumping Europe, and they didn't care about prospective problems in the Middle East or in China or North Korea, that they were just doing their C&I loans, they're just operating. That's the problem. The regionals, which should have been doing so well with a good economy, have not done well. And that's a testament to relative strength, how poor it's been. I think the tell there is that the big banks will ultimately just be as dull as the regionals have been.
And how about the XLF? When I look at that, I keep it really simple. I go back to June of 2007. They topped out at 30.97 in the XLF. You go to 18, and they top out at 30.32. So that, to me, is a pretty stark realization that maybe the banks are realistically out of gas. They're out of numbers, and these multinational or these big names banks, high cap stocks are done.
Well, and this has nothing to do with charts, but I mean, you all know this. What they were regulated to a point where they can't have the ROEs that they have. At the height of, they were trading at 3 times book, but things were being transacted. That's never going to happen again, as long as they're regulated the way they are. It's just not. It's not a place for alpha. If one is choosing between banks and other parts of the market.
At the same time, within financials more broadly, insurers
are that's killing it, which is also very defensive, right? I mean, insurers in particular, but Travelers and Chubb and other sort of property casualty and life health names are the area to be, or American Express.